All right, not too hot, not too cold. What stocks then do you invest in that fit with that not too hot, not too cold mantra?
Yeah, I think you made a really, we're all focusing on inflation at the moment. I think that's really key. So, you want to be holding inflation hedges. So I think commodities are an area that we're very overweight in our portfolios. And there's some interesting things playing out in specific commodities or underlying commodities at the moment. So our portfolios are skewed to that, where we're being more selective in the high growth areas of the market, the technology stocks that are going to see a negative influence from rising bond yields. So I think we've got to be positioning for that reflation trade to be ongoing.
Okay, so do you look at, break it down for us in the commodity space, do you look at bulk commodities? We know that iron ore is going through a bit of a rough patch at the moment. Or I note from some of your calls here that you like some other areas in the commodity space like uranium and lithium.
Yeah, there's been some huge moves in the commodity market. So just to set the backdrop, uranium's up 50% in the last month or so. You look at alumina prices up 25%. You look at coal prices; they've more than doubled in the last sort of 6 months. So there's been a huge rotation into some of these commodities that are less well known, less talked about, and it's all about supply side issues. So, in those specific areas, there's obviously been supply side bottlenecks pushing prices up. So, I guess you've got the backdrop of that reflationary trade, but you've also got different push and pull factors playing out in various commodities. So, we've been bullish on uranium. That's been a really strong call. Coal has been a really strong call of ours. So that's been a really positive undertone to portfolios.
Very quickly, before we let you go, M&A, what's the trajectory there? Of course, a few big deals where you are in Australia when it comes to Sydney Airport. What else is potentially out there ripe for the picking?
Yeah, good question. So yeah, huge amount of M&A deals happened in Australia over the last 6 months or so. There's probably a dozen there that I could highlight. Sydney Airport's the biggest one. Large overseas cashed up private equity investors partnering with domestic superannuation funds are really, they've got deep pockets and they've got an environment, as I just highlighted, of really cheap rates, and buying critical infrastructure at this point in time makes sense. So Transurban would be one I'd call out, which is a toll road operator both here in Australia and overseas. But these companies with high quality, long life infrastructure assets are clearly in focus, as we've seen with Sydney Airports in the last week.